Nifty Bank, Nifty IT. So we are seeing a little bit of green in the markets, but not the kind of results that we were seeing till about 10 days ago, where we had a day after day rally in the stock markets. So what is really impacting or likely to impact the markets during the day, of course, is going to be towards the close of the markets. We might see some sort of a pressure with the US Fed rate hike, which happened after the US markets closed yesterday. That is yet to impact US markets, and hence it's yet to impact Asia and India as such. So per se, the US Fed hike of 25 basis points, which I think Amit will elaborate upon later in the show, has not really made a massive dent. Also, I think markets in the US are going to be a little tepid because of the 25 basis point impact, and add to that, of course, to offset that rather, the better than street expectations results on Meta are going to offset whatever negative impact that the US markets should have on account of the rate hike. Now, while the Sensex and Nifty both happen to be in the green, and it's been a flattish opening this morning, some of the stocks that that one should watch out for include Tech Mahindra. So Tech Mahindra came out with its abysmal results after the markets had closed yesterday. So that impact is visible right now. Remember, Tech Mahindra net profits had come down 38% year-on-year basis for Q1, and that is not something that the markets have taken kindly at all. In fact, the stock is down about 4.3% in morning trade today. Add to that, there were also results announced by Dr. Reddy's and Axis Bank. Mahindra & Mahindra was a stock in focus because of its announcement of adding the 3.5% additional stake in RBL, and that was something that should have moved the sentiment towards Tech Mahindra on the positive side, but that doesn't seem to happen again. In fact, even Surf, Motilal Oswal Financial Services, both of these companies are attracting competition now from Geo Financial Services, which has announced its partnership with BlackRock to enter and perhaps disrupt the AMC business. So Motilal Oswal, which is directly going to compete along with Bajaj Finserv with the JFS, Geo Financial Services, is taking a beating. Motilal Oswal is down about 2% in market today, trading at about 819 rupees. And of course, the regular oil prices, gold, dollar index, etc., are going to be cues to watch out for, which may get impacted with the US decision to hike 25 basis points in the repo rate.
All right. I want to quickly touch upon Tech Mahindra because, as I said, results were abysmal. Net profit down by 39%.
That's right.
Which is one of the worst for IT companies that have reported their results so far. All in all, this could impact IT Pack, and I think we'll have to wait and watch out for that.
IT Pack is actually still not as drastically impacted as we thought it would be. In fact, it is in the green only right now as we speak. But yeah, Tech Mahindra's own stocks have taken a beating this morning, down about 4.14% right now, trading at about 1096 and thereabouts. So yeah, Tech Mahindra, and not surprising because of what we have seen as a result of US slowing down on its discretionary spending when it comes to IT, and whatever expansion, whatever value addition and adoption of tech to augment other business practices by US companies, where India was the obvious back-end sort of hub to deliver these services. All of those saw a beating all of last year and early this year. So I think those discretionary spendings should take off once chances of recession in the US become even bleaker than where they stand today, which are already bleak. But inflation continues to be a concern for US, and thanks to inflation, the Fed continuing to hike its rate by another 25 basis points, not unexpected, but after the pause that was taken in the last FOMC, the 25% basis point hike this time to reduce inflation and hopefully get the economy in the US back on firing on all its cylinders should result in more tech spends, which would accrue back to Indian IT sector. But that is unexpected to happen at least until Q3. So it seems, and most analysts feel, that Q2 is going to be as tepid and as sorrow for the Indian IT stocks as Q1 has been.
All right, but one sector that is beating all estimates so far is the banking sector. Axis Bank, brilliant results. Canara Bank, profits up 75%. IDBI, profits up 62%. All of this more or less on the back of loans.
Absolutely. So again, Shweta, I think what we are seeing in Q1 is not likely to continue in Q2 because RBI has taken a pause on monetary tightening. I don't think RBI is going to entertain another round of tightening simply because inflation numbers have also been reducing on a month-on-month basis, and inflation numbers come a month after the decision on rate hike or rate pause happens. So the impact of rates on inflation comes a month too late. So inflation has been more or less in control, though not anywhere near the 4% requirement that the RBI has put in the election year, that it's going to be 4%, not plus minus 2%. So that may entail another perhaps one round of tightening. I don't know when. It could happen maybe in the next third or fourth cycle from now, depending on how inflation numbers pan out. But until then, banks are able to offer loans at a higher percentage, at a higher percentage, and therefore the kind of swelling of the P&L of banks that we are seeing is on account of more expensive loans being dispersed and not as much more volume of business that they're doing.
Okay, so if the rate hikes do not happen in the next cycle, are we expecting loans could get cheaper perhaps?
Loans will not get cheaper unless there is
the
a
banks
rate cut.
decide to
unless
pass
there's
on.
a rate cut.
That is.
So rate cut is definitely not on the anvil at least until Jan, Feb next year. Until then, at best, I think it could be a pause. At worst, there could be one more round of tightening. So rates are going to be locked and rates are going to be static for as long as at least there is some cut, possibly once inflation comes below the 4% mark. But that is unlikely to happen at least until Jan or December or February rather.
Well, whether inflation will come down or not, we will have to wait and watch out.
It's coming down. Will it come down to 4%, where the RBI decides that, okay,
the
now things are under
RBI.
control, we are at 4%, let's start loosening the
All right,
policy.
whether that will happen or not, we'll have to wait and watch out for that. But another interesting story that is coming, and that is by the way of the economic growth and progress, is a statement that Prime Minister Modi made, and he said, when we took charge, and this is a story of India's political economy, when we took charge, India was the 10th largest economy in the world. Today it's the 5th, and it will be 3rd very, very soon, unless of course you don't vote us back. So asking for votes there, but also guaranteeing growth in process.
Absolutely. Let's look at the statement that came from Prime Minister Narendra Modi, and let's try and pull up that statement for you. But primarily, as I see this, is a growth guarantee. And unfortunately, nobody can really guarantee anything. We've seen what happened in the world. We've seen what happened with the pandemic, right? We've seen what happened even prior to that with demonetization. So Prime Minister Modi pretty much giving a guarantee saying that we have to achieve the target of making India a developed nation in the next 25 years. This, of course, is the Amrit Kal that has been talked about and mentioned in multiple forums ever since Independence Day 2021 onwards, that the next 25 years are the Amrit Kal. And this is pretty much in Prime Minister's own terms, this is his guarantee that India is going to be a developed nation once we complete 100 years of independence. But let's look at the data. I think it's difficult to challenge the numbers right now, because what he has said is pretty much the fact. We were a $2 trillion economy, and end of financial year 23, we were at a $3.75 trillion economy. So in dollar terms, we have seen a growth of about 87% overall, not a CAGR, not a year on year. But overall, the economy has grown about 87 odd percent. So I think the momentum is already in place for India to break that threshold of being the 5th largest economy and enter the exclusive club of the top 3. But is it only politics and policy to laud for that effort? I don't think so. I think that growth momentum had started even during the UPA's journey, right? We saw the results of that accrue over time. Interestingly, Prime Minister Modi is talking about the infrastructure push which has taken place in the last 9 years. No doubt, you've got to give him credit and give the credit to Nitin Gadkari, the highway and road minister, for pumping in as much as about $34–35 trillion already into infrastructure, another $10 trillion likely to be invested in this year. But what this means is that the GDP growth that we are seeing on account of, let's say, the full 10 years of Modi's government of about 45–50 odd trillion rupees, which is a trillion is a lakh crore. So 50,000 lakh crore rupees in infrastructure spend has happened by the government, not by the private sector. So if you look at the traditional GDP formula, it has to be a mix of consumption, it has to be a mix of government spending, it has to be a mix of private sector capex investments, and it has to be a mix of net exports. Unfortunately, the only area where India is continuing to register growth is government spending. And this government spending is not happening out of thin air. This government spending is happening out of the taxes that the middle class is burdened with. So these taxes are getting deployed for infrastructure development, which is great for the overall long-term prospects of the country, because that is going to add employment, multiplier effect of connecting cities, connecting rural India, urban India, supply chain, all of that. But I'm not happy about the fact that this growth is not really consumption driven growth or growth by capital investments of the private sector, and which I think, depending on the political environment, once we are through with elections and the next government is sitting in the hot seat around this time, earlier than this time next year, which is when I think some semblance of stability in policy is going to result in spending by the private sector. Now, inflation of course has been an issue. COVID had been an issue to slow down consumption and expenditure by citizens on consumption. But at the same time, we are also seeing the emergence of an aspirational India, which is buying houses and buying cars, both new and second-hand cars, and adopting electric vehicles, electric mobility, like we've never seen before. So I think a lot of what Prime Minister Modi is committing to and promising, by way of economic growth for India, has to come on account of both the private sector spending and has to come on account of consumption taking off. And third largest economy, to my mind, should not be a barometer when rest of the world, the developed economies in Europe and US are degrowing, or if not degrowing, are growing at a much lower clip than India. So you could become the third largest in the world on account of other economies not growing as fast. In absolute terms, are we still going to be any contender to compete against China and US, the top two economies in reverse order, US being the largest, China being the second? I doubt it. Even if you're able to reach the $5 trillion economy mark by end of this decade, by 2030 or so, China would have grown to become a $30 trillion economy. US would have grown to become a $50 trillion economy. So the gap between the third and the second is still going to be enormous. And we may be lauding ourselves that we are the third largest, but we will be the third largest still with a gap down. And that is something that we need to work towards.
All right. So work on the gap that exists between the second, third largest economies, currently India being the fifth largest economy in the world. A lot of promises being made by Prime Minister, of course, on the back of the fact that the government will come back to power. And if that happens, Prime Minister is assuring that India will become third largest economy. Whether that is something we should celebrate at this point in time, well, Karthik clearly has explained all those factors. We will, of course, have to wait and watch out for how. And something very interesting I think we should also touch on, and that is, Karthik, how much of it is in government's control and private sector's control, because experts deeper demand, economic degrowth or slow recovery overall worldwide is not in India's control. So many of these factors that would help India's GDP align to its growth forecast would also depend on how external factors are going to play up, and a lot of that is not in government's control. So promise of growing at that rate,
guarantee it's a guarantee comes with the Modi guarantee, the stamp of,
yes,
of Prime Minister Modi.
Amit.
It's like pre-COVID, Prime Minister Modi had said 5 trillion by 2025. Because COVID happened, that is not going to happen. 5 trillion may happen by 2027 or turn of the decade. But so you don't know what's going to happen tomorrow. Maybe there's another virus that comes around. Maybe there's
God forbid.
So the guarantee is a little bit of a stretch.
Right.
But yeah, capital from the government side, like I said yesterday, they are doing certain things right. Capital expenditure is a problem, but they have extended the government spend from 7.5 lakh crores to 10 lakh crores. But that is to prime the private sector to basically push in more capital
So
expenditure.
basically waiting for private sector to jump into fray before
Animal
we can
spirits of the
guarantee.
private sector to be
animal
unleashed, as they
We're
call it.
waiting for the
But
animal
I think,
spirits
it's
to be
not, it's
unleashed.
not technically fair to only blame the pandemic for whatever little degrowth that we saw, and the whole world saw that. So, I'm talking again in the context of this interconnectedness of the world. The world's a global village. There are interdependencies. But I think we had seen growth slow down to 6% levels even for the 2 years before the pandemic hit in 2020. So 2018 and 2019 also saw low growth. Now, let's put this into context again. And since Prime Minister Modi was talking numbers, I think let's just bring up some numbers which global agencies like IMF and World Bank are talking about. World Bank says that for India to become a developed nation in the 100 years of its independence, which is 25 years from now, India needs to grow at 7.6%. RBI's own projection for FY24 is 7% growth, right? Now, every year that you lag the 7.6% growth,
0.6%.
you need to, so anything below 7.6, you will have to compensate for that over time by
Next
growing at a
year.
larger
Absolutely.
clip. So larger than 7.6% in an environment where you don't really know how the global uncertainties are going to pan out will be difficult.
Absolutely.
Now, IMF, on the contrary, has, even though it has revised upwards India's growth projection, it has taken it up to 6.1% from 5.9%. So I'm saying, even though RBI's projection, Finance Ministry's projection last year, FY22, was exceeded by the actual numbers which came out at 7.2%, I think overall, if the IMF and the World Bank data is to be taken, IMF says 6.1% is going to be your growth rate. India says we will grow at 7%. IMF says you need to grow at 7.6%. It's a fairly large 150 basis points of delta that we are talking about between the lowest and the highest projection to become a developed economy. So yes, I think we are bang in the middle of or the start point of the election fever. It is NDA versus INDIA. It is Modi versus INDIA. I think this is an election clarion call. This is something that is being announced to woo investors, because nobody uses words like guarantee, right? I think we live in an interconnected world, like you said. We don't have control over what oil prices are going to look like. We don't know whether the lithium sector opening up to private sector is going to give us electric batteries or not. We don't know what kind of investments get made in India by foreign players and domestic private players. So there are a lot of areas where guarantees could be falling
not
through
sustainable.
the cracks, may not be sustainable.
Absolutely. And since we're talking about lithium being open to private sector, what's that going to look like? This is an announcement that could bring cheers to the private sector. What would it entail?
So, Shweta, I think, about 4 months back or so, 4 months ago, if I'm not mistaken, in the month of March or April, India had claimed that we have lithium reserves in Jammu and Kashmir, right? And let's pull up those numbers also and talk about those numbers as well. But lithium is one of the most essential ingredients that go into batteries for electric vehicles. Electric vehicles will largely depend upon India being able to build its own batteries, and these batteries being built on merits of localization, not on import. And that sort of now comes again into focus with the new Minerals and Mining Amendment Bill being tabled in the Lok Sabha yesterday, wherein 6 atomic minerals, which were called atomic minerals earlier out of a list of 12, are now likely to or proposed to open to the private sector. Out of these 6, lithium is one of those 6 atomic minerals earlier classified as atomic minerals, where government had full control. Now, with the private sector being allowed, in proposal at least, and hopefully the bill should pass, to go ahead and explore these rare earth minerals, including lithium, then I think it becomes a great case for us to extract these lithium reserves from Jammu and Kashmir and deploy them back for use in electric vehicle batteries. And with private sector opening up for this sort of exploration, I think there is going to be a lot of interest from companies like Vedanta, which are already invested in the semiconductor space of India, to now diversify, because it is a mineral and mining
Company.
natural resources company, I think a company like Vedanta and others in the fray are going to want to latch on to this opportunity. And the government is likely to work out a reserve price for lithium, that this is the minimum price at which lithium is going to be extracted and sold, and thereafter auction these blocks for mining, hopefully in the month of December, as per reports and as per what was stated in the bill. Now, I think it is a great opportunity for private sector battery production for EVs to take off. But in addition to that, I think rare earth minerals will also open up the opportunities for other elements that may go into production of, let's say, semiconductors or other allied materials, on which electronic items, which all depend on these raw rare minerals, to manifest India's position in the whole electronics manufacturing space. So add that with, let's say, PLI already in place for manufacturing, add that with other government schemes, incentives, I think it becomes a great opportunity for India to now state its presence in the world of electric mobility.
All right. So the introduction that has been introduced by the way of reform in the Mines and Minerals Amendment Bill 2023 will be tabled in this session of the Parliament. We will see if and when it goes through, and if it does, private sector will have new opportunities in mining of rare atomic minerals, especially lithium. We'll see how that pans out. But shifting focus now to another industry that we continue to track, and that is e-gaming. Amit, e-gaming industry has been constantly knocking on the doors of the government, saying that you need to relook at the 28% GST levy. It is not sustainable. We are going to die. However, so far, the government has not budged. Finance Minister has not budged. Various GST Council members have also given, their sense of how it is fair to charge e-gaming industry at 28%. You cannot have them being charged at 8% or 18%. However, of late, Rajiv Chandrasekhar, the MOS for IT, has constantly been going to Finance Ministry, also in talks with Finance Minister, asking them to relook on the back of the fact that there has been representation from e-gaming sector, which is currently latching on to straws. What happens here on?
August 2nd is when we'll get to know.
Okay.
They're meeting, the GST Council is meeting next on the 2nd of August, when they will decide whether 28% is going to be pan the gaming sector, or they're going to go back to the 18-28 formula. But going by, again, I'm repeating myself from previous times, from the tone of the Finance Minister's announcement, I don't think so the government is in a mood to budge on this one. So it is going to be 28. Probably what they will do is the 28% may not be on the cover at the time of payment. So that is something that may happen. There is no guarantee of that as well. But I believe from the reports, it is going to be 28%.
28% Karthik is likely to stay.
So I think the government has very categorically stated, and the GST Council has very categorically stated, that there is no rethink. 28% stays. And 28% stays across casinos, across online gaming, across horse racing. Perhaps what could come up for discussion could be a very clear definition of online gaming, and if that definition is differentiated from, let's say, the definition of esports, we could hope that there could be some relief for what is right now largely classified under the ambit of e-gaming. But I doubt there is going to be any rethink either on the rate or on the face value on which the rate is going to be applied. So I think it is going to be the face value, it is going to be 28%. It looks like the 2nd August meeting that Amit was talking about, when the GST Council meets again, there is going to be this question of repetitive taxation, retrospective taxation, and technical issues on how this taxation is going to be implemented. For example, if you were to add a certain amount in your wallet on an e-gaming platform, then do you get charged immediately as you add on? What happens when you withdraw, when you transfer that fund and add it again? Right. So that comes under the confusion of repetitive taxation. So I add 100 rupees, I make some winning or I lose some, I withdraw 50 rupees from my wallet back to my account. The next time I add those 50 rupees, am I going to be taxed 28% again? So that becomes a technical issue.
Right.
So how does the industry develop its processes, its tools to ensure that this repetitive taxation doesn't technically mar gamers? But what is also happening, and this is a story, Shweta, that you had pointed out, earlier in the morning, and maybe we could touch upon that briefly, is this whole bid of international gaming companies trying to woo Indian gamers by announcing digital ads with banners saying that, hey, come play on our platform and don't pay any GST. 28%, what 28%? No GST.
No GST.
Right? So I think this was the concern which came out in early days of this announcement of 28% GST, and the fears that the industry had cited. First offline and first formally and then sort of offline in our conversations with industry, it pretty much suggested that that this is not a threat for them. They are not looking at offshoring their businesses. They are not concerned about Indian gamers latching on to international platforms. But I think with these ads, at the end of the day, a gamer is a gamer, right? And you're playing with real money. Would you want to pay 28% of face value on and give it to the government? And this incidentally is in any case post-tax income. All the GST we pay in any case is post-tax. It's not that we are paying GST on which we are getting some rebate in our income tax. We are in any case working for the government of India for 6 months in a year as a 30% tax-paying citizen. So now these fears of gamers migrating to international platforms, and in addition to that, the fear of Indian registered gaming platforms registering their platforms outside of India to save GST become a hard reality that the government of India will have to stand up to.
So this is something that gaming industry in India has been fearing for a while, and this has now become a reality. Online gamers now have other avenues, especially if you go to global players, they're not going to charge you any GST.
True.
Which means gaming sector in India net is got to lose in the long run.
But then there is going to be LRS.
Okay.
So that kicks in,
interesting.
right?
But
you use your credit card to transfer funds into
there is
an
a minimum
international
threshold.
platform. That threshold is 7 lakhs. I don't know how many people will be playing games
for 7
lakh rupees,
right.
Which I think gamers right now may not take very seriously, but it could come back.
Now, I'm not an avid gamer, but I'm sure those who are going to be thinking as to where to put in their money. Should they continue their association with the Indian gaming industry, or should they look up to what and how global gaming platforms are trying to woo them? We will come back to this story, but moving on, Krishna Kumar is with us at this point in time. Krishna, another interesting story that is coming in, I think, and which is a big one, Jio Financial Services and BlackRock is going to come back to India. It exited when in 2018 with DSP, and now it's coming back to India with Jio Financial Services. It's going to be a JV. What does it offer to people?
It basically means that hold on to your plans of investing in any kind of SIPs or mutual funds. There's going to be a whole new bunch of financial products hitting the markets. That's what it basically means. And more competitively priced products, more attractive products. These are financial products. It's going to come with a international collaboration, maybe better this time around. Then we've had financial products being thrown at the Indian consumer with international collaboration, in other areas. For example, there was Future Generali Insurance, which sounded cool but doesn't exist anymore. So my only fear is that when foreign companies come into India with a JV to sell financial products, their longevity in the Indian market is what I would be concerned with at this stage. But that's a long-term call. To start with, BlackRock is a huge financial entity from overseas, was there in the Indian market, is now back in the Indian market with no less than Jio Financial Services. So that to me is more of a in a sense a consolation than BlackRock coming in, because BlackRock can come in with any partner, could have come in with any partner. The fact that it's coming with Jio Financial and it's a 50-50 joint venture. I mean, come on, world's largest asset manager coming into India with India's largest and most valuable company's financial services arm. That has got to be trustworthy at this stage, at least for sure. And more importantly, I am anticipating that Jio would do what it did with the OTT business and the telecom business to the financial services business as well. Really, that's my expectation. What did Reliance do with retail? What did Reliance do with telecom? What did Reliance do with OTT? So, they walk in, change pricing, change the fundamental dynamics of all this thing, how these things work, and then take price out of the equation because they can. I'd love to see what they would do with financial products and financial services because that's the next panacea as far as the Indian consumer is concerned. Because Indian consumer did not get imported products and services from before. Now they get everything. From your Zara clothes to your iPhones, you get everything in India. The one thing that you really find it tough to trust and put your money in is a financial services product.
Okay.
And that's the reason why you have so many financial services influencers, fin influencers, and fintech influencers, and fintech companies popping up because it's difficult for people to decide. Maybe Jio and BlackRock make it easier for consumers to decide in India, Shweta.
Absolutely. And Jio Financial Services, it's been days since they made a foray into the market, price discovery happened, and we've sat here, we talked about how they're going to spook their competitors, and nothing bigger than this. Karthik, entering with one of the biggest players in the asset management industry, BlackRock, bringing them back to India. I think sky's the limit for what it comes to when we talk about financial assets that you can invest in.
So I believe, Shweta, the news is not as much about the BlackRock JV as it is about Jio Financial Services becoming an AMC, an asset management company. It is no longer going to be just a lender. It is not going to continue to be another fintech service provider. This is going to be a full-fledged AMC. Now, just when you thought that, Jio is or Reliance is present in every industry anyway, and there is very little left for Reliance to compete with at an industry level, it goes, knocks on the door of Motilal Oswal and says, hey, wake up, I'm in town and I'm here to eat part of your lunch. It goes to the likes of ICICI Securities, HDFC, pretty much, every financial institution has an AMC wing of its own. And all of them continue to fight over the size of the assets under management, the AUM, because the more AUM you have, the more transactions that happen on your platform, the higher is the revenue that you draw by way of whatever little 1%, 1.2%, commission, exit load, total expense ratio. These are all technical terms in the mutual fund industry, but every time there is a transaction and every time there is an investment, your AUM grows, and that gives you the capacity to deploy those funds across various asset classes and return to your investors a market-beating alpha, as it is called, an alpha over and above what an index fund is going to offer you. But to begin with, it is estimated that this JV between Jio Financial Services and BlackRock is going to only come with index funds. Okay. They're going to be passive investing tools, not active investment tools, primarily to ride on the wave of passive investing by way of mirroring the investments of indexes. So let's say there's going to be a Nifty passive fund, index fund, there's going to be a Sensex index fund, a Nifty bank fund, a Nifty IT fund, etc., which is going to hold the shares of companies in the same ratio as the index. Now, with Jio's overall reach through its telecom services, I think getting investors and communicating with potential investors to financialize their savings by way of market-driven investments is going to be easier than existing AMCs like Motilal Oswal or HDFC Bank or ICICI Bank, who together, and I may dare to say perhaps even cumulatively, may not have as many customers as Jio has, right? So it's going to be difficult for others to compete with the volume of data that Jio can reach out to and encourage. And Krishna was talking about, BlackRock being a US-based investment firm, and this trust component or the trust deficit in parking your money in international joint ventures. I think that gets offset with the trust of Reliance, with the trust of Jio. So overall, I'm excited with this new entrant. At the same time, we haven't seen too many new entrants yet. Let's say talk about Navi mutual funds, which Sachin Bansal, Flipkart founder, invested in, didn't take off.
Didn't take off. We don't know whether this is going to take off. But then you have Jio. You've got the name Reliance backing you up. You've got the name Ambani's backing you up, and all of that account for a lot more than what we can think. Yes, Amit.
For all you know, it may be a carpet bombing of products into the market. Jio,
it's a nice
Reliance
phrase.
does that,
I quite like this phrase. and as Reliance is known to do it, could do it in this sector as well. We'll bring more details, but let's shift focus to aviation sector now. It looks like, and from what appears to be developments, Amit, coming out from NCLT, from the tweets that Go First has put out, the road ahead is clear. NCLT says you can fly with the aircrafts that you has. Telling lenders, telling lessors at this point in time to hold back. We're not giving you your aircrafts just as yet.
Yeah, it comes on the back of the DGC had not deregistered those aircrafts. So the NCLT has said that your Go First is allowed to use them because the DGC has not deregistered them. So that, and add to that, Go First has said that their test flights have been successful. Their flights had been cancelled till when they announced in May till the 27th of July. In the month of August, we are expecting Go First to be back in the air. So that is the good part of.
All right. So
these
developments, Krishna, coupled with the NCLT sort of order, and then the fact that Go First put out that tweet that we were referring to yesterday, where they successfully took a tour, tested a flight. They're now ready. It's going to be get set go for Go First very soon. Hopefully as soon as 1st of August. We can't hear you. I think you're on mute, Krishna.
Can you hear me now?
Yes, we can.
Yes, so I was going to say that, I love how we just track the story blow by blow. Every single little detail that we need to know that can get us closer to the truth of how soon can we start booking Go First flights. And it looks like August 1st, Shweta, and I'm really fingers crossed over here for all of our sake that it is August 1st when Go First takes to the skies. But bear in mind, the chartered aircraft begin today. That's what that's what the news that we got, because the testing for taking off began yesterday, testing of the flight, testing of the facilities, and also the application for slots of Go First at airports for their takeoff and landings were given away. They have reapplied for those slots. So literally everything that needs to be done to build up to a takeoff has been done, and now comes this latest NCLT orders, which removes further obstacles away. So it's just a matter of time right now, I think, Shweta, for the final approval from DGCA to come through and for us to start booking tickets. Because bear in mind, there was some rumors that you could have started booking tickets starting this week, but they've really made clear that they've put it on hold. They're still not ready to book tickets. Hopefully, Monday onwards, we get to start booking tickets. Coming Monday onwards.
Okay, coming Monday is when people can look at start booking tickets. Good news for Go First, but not so much for another company that we continue to track, and this is by the way of one of the biggest quick service commerce platform in India, Dunzo. All's not too well at Dunzo, Amit.
They have been slapped by legal notices by 7 companies: Google, Nilenso, Clover Ventures, Facebook India Online Services, Cupshop, Koo and Glance. The total amount that Dunzo owes to these companies is 11.4 crores. Dunzo is struggling to get fresh funds from the market, so they are cash strapped. Salaries have been deferred within the company. Pay packages have been capped at 75,000 per employee. Third round of layoffs has been announced. We don't know how many, but it has been announced. So not good news there.
Not good news there for Dunzo. Dunzo continues to lay off. Notices from as many as 7 companies for unpaid due. Dunzo will now have to respond to these legal notices. Not looking too good for Dunzo. It's been a while
now. To add to
now.
that, Shweta, I think even the contribution to provident funds, like we had seen in the case of Byju's, has not happened.
Not been made.
And employees apparently are yet to receive their Form 16 to file taxes, and the deadline for that is nearing. Monday, 31st of July is the deadline for all citizens in India to file their taxes, and employees
which means EPFO contribution has not been made by the
and Form 16s have not been received. So if Form 16s are not received, on what basis do employees of Dunzo file their taxes? So I think again we are looking at this bubble of corporate governance bursting on a company like Dunzo. You owe money to lenders, your valuations are being re-looked at, employees have not been paid salaries. It doesn't look like the quick commerce sector is going to shape up with Dunzo being a key player unless there is some revival on account of corporate governance, financial reporting, payment of salaries, clearance of dues, and overall responding to vendors. A lot of
big whole mess that Dunzo is in right now. I think it merits a bigger discussion, perhaps something we can come back to in afternoon, as to why and how Dunzo has landed itself here. How did it get here from being a very popular platform to now currently really struggling to survive, struggling to keep itself afloat? But shifting focus to global stories that we're tracking, and the biggest story that has come in is by the way of US Fed hike. Let's get Krishna back on the show. Krishna, this is what many are calling the biggest hike in 22 years, or the highest that rates have been in the last 20. Some are saying 16, Karthik can correct me. Some are saying 16 years.
22 years. 22 years since we saw the 5.5% interest rate. But the range, US unlike India has a range of between 5.25 and 5.5. So in that range, 5.25 is something we saw 16 years ago. 5.5 is something we saw only in 2001. Krishna.
Absolutely right, Karthik. Since 2001, highest rates since then. We're talking about around a dozen rate hikes since March 2022. In the last 1 year or so, more than a dozen, nearly a dozen rate hikes. 11th rate hike, by the US Fed. And also, what's important to bear in mind is that the guidance that was given along with this rate hike, that there is room for more rate hikes going forward by the US Fed as well. This won't be the last, and this rate hike was up for a 25 basis point, or a 0.25% rate hike that we're talking about over here. And all of this is coming on the fact that inflation in the US is not where the US Fed's target is. In fact, it's double of US Fed's target of just around 2%, more than double. So inflation in the US is still above that 4% mark, and that's the reason why you're seeing the US Fed, United States of America's central bank, keep that hawkish stance, as it's called, hawkish stance of keeping interest rates on the upward swing, are continuing with that and not holding on to that rate, and in fact saying that this is a rate hike. Is the 11th rate hike in about a year's time. This could be more going forward. So that's where the US Fed stands as of now. All of it is purely driven by the American central banks, wanting to control inflation, which is hovering about the 4% mark in the US Shweta. And that should tell Indian banks and Indian interest rates where they are going as well.
Okay, inflation continues to be above the 2% threshold at the moment. After a pause, we've seen a rate hike. Is this likely to continue, or is this it for now, Karthik?
So, Shweta, I think it completely depends again on data and what this rate hike of 25 basis points is going to mean for inflation in the US. And that data is going to come a month too late. So, I don't think right now we can put a finger on whether this is the final in the installments of rate hikes that we have seen from the US or not. But I think any further tightening than this is going to spell doom for the US economy, and that is not going to augment well for overall the economy of the world, not just US alone.
Absolutely.
So not just consumption, I think overall discretionary spending that we spoke about earlier on the show.
Offtake of loans.
Offtake of loans, discretionary spending, chances of recession, all of that augments itself even further if there is further tightening. So US will have to live with whatever inflation that gets thrown up in numbers after this rate hike, and not tinker too much with monetary policy for at least another 6 months or so. If it does that, it could be catastrophic for the economy.
Well, not sure whether monetary policy will be tightened, but something for sure that Jerome Powell said this, and the statement that I'm reading at this point in time, will be comfortable cutting rates when we are comfortable cutting rates, but it won't happen this year. So you can't
expect. Cutting rates is out of the question.
It will not happen this year. Whether monetary policy is going to be tightened further? We don't know, but remember, this is the 11th consecutive hike. Yes, Amit.
Yeah, their economy grew at 1.8%. So I don't think so. They should be going in for more rate hikes because they are dealing with that.
Okay.
And
high inflation, low growth,
Stagflation, the typical definition of stagflation. Right? Your rate of growth is lower than the rate of inflation.
Absolutely.
How do you grow?
And how do you maneuver these
And how do you prevent
global
yourself from slipping
challenges?
into recession?
How do you stop yourself from slipping into recession? All that, of course, will be for FOMC, for US Fed to decide in months to come. But with that, it's a wrap on this bulletin. Thanks very much for watching.
मैं इमरान अहमद खान नियाजी सबके दिल से हल्फ उठाता हूँ.
When Imran Khan came initially into politics, he thought his personal popularity would be sufficient for him. It didn't happen.
The retired military generals are openly saying that Imran Khan is a better choice.
Imran Khan may have bitten a bit too much, more than what he can chew.
Implosion. This and more. Streaming on world's first news OTT. News 9 Plus. Download now. China won't let us rest easy on our borders, but they will keep flooding our markets. What does Xi Jinping really want?
I think he wants the Indian market, no doubt about it. It's really a matter of showing their dominance.
India's great Chinese conundrum.
Nobody can contain it. Not the United States, not China, not anybody else.
Frenemies. Streaming now.
We have promised that we will decarbonize our economy.
India will be leading this whole green hydrogen race.
I still believe that Indian road transportation, commercial, which governs your entire consumer price, can be run cheaper on green hydrogen versus fossil fuel as on date.
Green hydrogen is a very major, it's going to be a very major